Buckle up, everyone. You are strapped in and ready for the Insurance Hour with me, your host, Karl Susman, informing, educating, and entertaining one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me today. We are going to talk about all things insurance, answer your questions, learn a lot, probably more than you thought you needed to know, and you will learn whether you like it or not. Give us a call if you have any questions you want to be on the air, 559-656-0317. You can call or text that number. Also, you can send your questions in to questions@insurancehour.com. Today, we are going to jump right in and go through your questions. We have a bunch of voicemails here queued up and ready to go. Let's jump into the first voicemail that was left. This one is voicemail 52M02. I'm not quite sure where they come up with this naming pattern, but at any rate, let's hear what we've got.
Hey there, this is Benjamin from Santa Clarita. I recently bought a commercial van for my plumbing business. Do I need commercial auto insurance, or can I just add it to my personal auto policy? Trying to keep things simple, but legal.
Hey there. Yeah, that's a great question. And a plumbing business would certainly be something that would not be covered under your personal auto insurance, unless there's something that's incidental and the personal auto policy has provisions that you add on specifically for it. This is a true and blue commercial exposure. So the answer is simple. This is a commercial auto policy in its truest form. So check around. See which carriers are going to offer you a competitive rate for commercial auto insurance. Also, keep in mind, if you are driving your personal vehicle for business use, maybe you happen to take your other vehicle out, you're going to do a bid on something, you're not bringing your commercial vehicle out, there could be some exclusions in your personal auto policy that would not provide coverage in the event you have an accident if you're out and about doing something relating to work. So just something to keep in mind. Let's go to the next voicemail. This is 25F02, and I can't help but laugh at those names. Anyway, let's hear what this person has for us.
Hello, this is Zoe from Daly City. I run a small online boutique from my home. Do I need business insurance, or does my homeowners policy cover my inventory and liabilities?
That's a great question. Home-based businesses are a big deal, and they've gotten to be an even bigger deal as obviously since the pandemic, when people started working from home for someone else, they have sort of pivoted to some extent into working at home for themselves, which is terrific. So understand that when you have a business at home, and you're saying this is a boutique, that's pretty generic. I don't know. Does that mean that you're drop shipping things from your home? Does that mean you have people coming to your home, looking at things and buying things? What exactly does that mean? Either way, you need to find out if you're going to be getting one of two things. First, your homeowner's policy is not going to give you the coverage you're looking for. This is not the coverage you're looking for. You're going to be looking for either an endorsement onto your home policy for certain types of exposures, and you can check with your individual insurance company or agent or broker to see if there is a home-based business endorsement that's offered for your particular type of business. Otherwise, you can look for, and there are no shortages of them out there, for a home-based business insurance policy. They're out there. If it turns out that still you don't qualify for any of those, since this is a true business, then you would need to look into potentially getting commercial insurance, to get an actual commercial insurance policy to cover you and your boutique. Again, I don't have a lot of information about what kind of boutique it is or what the actual exposure is. Like I said, foot traffic is a big deal. Are you making products and then relabeling them? Are you making products from scratch? There's all sorts of liability potential exposures to that I want to be sure that you have, that you're educated on and you find out. So with something like this, you really want to be sure that you have a good broker that you can speak to, tell them exactly what it is you're doing, and tell them, say, I don't know what I need. Tell me what I need, and educate yourself. Because what you don't want to do is start a business from home, start growing, start doing well, and then you have one bad apple come, you need an insurance coverage, and you don't have it, and then all of your hard work could go down the drain. Let's go to the next question. This is 33M, and let's hear what we have.
As someone who lives in a region prone to wildfires, I've been increasingly concerned about the adequacy of my homeowner's insurance. I've heard about the California FAIR Plan, but don't fully understand what it offers compared to standard policies. Is it something I should consider adding, or is it only for those who can't get insurance elsewhere? Any insights would be really helpful as I try to protect my home.
Hey, great question. Thanks for calling in with that. The California Fair Plan is an insurance pool in the state of California. It's backed by the financial strength of the admitted insurance carriers in the state of California. You could look at it as their ticket to do business in California. They have to support it by putting money into the California Fair Plan, which is for people that are in either higher risk area for things like fire, or for one reason or another simply cannot obtain fire insurance through the private market. Now, California is experiencing some significant problems with their insurance market, so it's seeing an unbelievable amount of growth right now because the private market is all but shut down. A lot of this should be changing in the next couple of months, fortunately, but for the time being, the Fair Plan is somewhere you want to go when you truly don't have any other options. Now, this caller mentioned that should he look to add that? You wouldn't add the policy to Fair Plan. You wouldn't add a Fair Plan policy. You would actually have the Fair Plan and then look to add other policies to supplement the Fair Plan. Again, California is not unique. Other states do have Fair Plans. Again, they're designed to be there in the event that the private market does not have the ability to provide fire insurance coverage. I believe the latest state to come out with their own Fair Plan is Colorado. Not the state that you think about for wildfires, right? But believe it or not, they are having enough of them that the private market has responded and said, look, there are so many areas now that are having so many fires, we are unable to adequately price for that risk. And whenever that happens, then we'll have to have some type of an alternative where that risk is spread among many insurance companies. And in essence, that's what the California Fair Plan does. It takes those high-risk areas. All of the insurance carriers in the state are forced to participate in it, and then based on premiums collected, and if there's not enough premium, then the insurance carriers have to write a check to take care of any shortcomings for claims. So it's a way that the industry and consumers can spread the risk of fire exposure between not just one insurance company and one consumer, but one consumer, lots of consumers, not one carrier, but many insurance companies. We should probably do a separate show all about the Fair Plan concept, as we're going to be seeing a lot more of that in a lot of other states as we're seeing weather patterns continue to shift and climate change wreaking havoc on it. We're going to all need to know what is the Fair Plan, when to go there, what it covers. Most states are going to follow a similar path and pattern, but your state may vary from others. So always talk to someone that knows. Let's take our first quick break. When we come back, we will go to more of your questions. This is Insurance Hour. I am your host, Karl Susman. Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when, they can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There is a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here and learning about insurance with me today. Today's show is sponsored by GeoVera, and GeoVera is actually the place that I have my personal earthquake insurance. I've had it with them long before they were sponsoring this show. That is because I feel that they offer some very competitive rates, some very competitive and unique products and policies, lots of deductible options, lots of different options in general. So in the event you're looking to get an earthquake insurance quote, and you should do more than get a quote, you should actually be getting a policy, you can jump on the online, go to insurancehour.com, and you'll see GeoVera as our sponsor right there. Give it a click, get yourself a quote, takes all of 5 seconds. GeoVera, we thank you for your support of Insurance Hour. Getting back to the show, we are going to be going through more of your voicemails that you have left. In the event you want to call in right now with your question, please do. Give us a call at 559 656-0317. You can call that number or text it. You can also send a question in to questions@insurancehour.com. Also, if you want to post your question, there's always another option, right? You could go to insurancehour.com/ask, post your question there, and we will get back to you. All right? Speaking of getting back to you, let's get on with the questions. This is voicemail 56M like Mary, and let us hear what we have from 56M.
Good morning. This is Logan from Oceanside. I'm planning to buy a condo downtown. How does condo insurance differ from regular homeowners insurance? And what should I be aware of regarding the HOA's master policy?
That's a great question. Condominium owners' policies are very different than standard homeowners insurance policies. Now, I like to try and say that they're all, in essence, home policies, right? You tend to live in your condominium if you purchase it as a primary residence, but the coverages are very different. So here's the best way to describe condominium insurance. Let's envision a large building, okay? You've got a large building, and let's say there's 50 units in it. 50 individual units that can be bought, they can be sold, they're individually owned units. Now, there is a master policy that's going to cover the entire structure itself. However, when that master policy kicks in, if there's a loss, it's just going to rebuild the structure, and it's going to make, in essence, 50 little spots for each unit. Okay? Now, I'm speaking a little bit generically because some homeowners association policies may differ slightly regarding things like the interior walls, finishes, things like that. But in general, the HOA policy is designed to put the main structure together and carve out those 50 spots. Now, condominium owners insurance, that's the policy that the person who purchases one of those units would get. That's going to cover the inside. They call it walls in, meaning that it's going to cover the inside walls and everything that's on the inside. So we're talking about all of your personal property and things that you might do that are attached on the inside. You might update the kitchen appliances, the sinks, the cabinets. You obviously are going to have walls inside your units, dividing the different bedrooms, bathrooms, things like that. All of those things would typically be covered under a condominium owner's policy, not the master policy or the HOA policy that I was talking about earlier. So the main thing to keep in mind is there are two primary property coverage options for condominium owners policies. Now, maybe that sounded a little bit funny. Let me try again. Condominium owners policies cover many things, but when we talk about property, we're talking about things you can touch. They're tangible, right? You're going to have two options for condominium owners policies. You're going to have one option to select the limit for that walls in portion, right? Now that's going to be a dollar amount, and you're going to determine that based on how much is on the inside that's physically attached. Remember, anything attached on the inside is going to be considered real property, they call it, or tenant improvements or unit owner improvements. Just it has lots of different AKAs. But understand that we're talking about the things that are attached. If you were to take off the roof and shake, it does not fall out. Then the other part of the property coverage portion for a condominium owner's policy will be personal property. That's all your junk, all of your cherished belongings. This is the stuff that we box up and take place to place. Funny story, I remember once when I moved from one house to another, and we're boxing everything up, doing what we always do. And a couple of years later, we were going to move again. And as we start packing again, I noticed here's a box that we had not opened since our last move. And we looked at this box, we looked at it, we looked at each other, we looked at this box, and I said, you know what? If I have not opened that box in all of these years, not only am I not going to bring it with me, I'm not going to open it. I don't want to know what's in it. I'm going to throw it in the garbage. And I actually did. And I'm proud to say I pulled it off because you can imagine the curiosity I had. What could be in this box? But again, my feeling was if I hadn't needed it in all those years, I certainly don't need to drag it around with me again. So that box just got thrown away. I'll never know what was in that box. Anyway, so your personal property are the things that are in the house. It's the loose stuff. It could be furniture, it could be your computer, it could be your clothing, your television, all of those things. Now, keep in mind that for personal property, there are sub-limits on most condominium owners' policies, meaning they can't say you can have an unlimited amount of jewelry because they don't know what jewelry you have, right? So how can they price it for an unlimited amount of jewelry when I may have no jewelry and you may have a ton? So certain things, jewelry, watches, furs, fine arts, guns, cash, things of that nature, you're going to find actually have sub-limits in the policy. So you need to talk to your insurance professional, tell them what you have. Be sure they either increase those limits so that you do have the protection, or they offer you a different policy that will go ahead and cover those items for you as well. Those are the two primary property portions of a condominium owner's policy. It will also cover things like liability insurance. Most condominium owners' policies will. Liability insurance, for quick review, that's what's going to protect you in the event that somebody brings litigation against you. They're suing you. There's something you've done wrong and you're being held liable for negligence. This is the coverage that would kick in and, in theory, would protect you from that. Actually, let me back up. You don't even have to be sued, per se, to have your liability coverage kick in. You could be negligent in some way. Another party might come to you and say, you were negligent, you caused damage to me in XYZ form, and your insurance policy would be triggered. You don't have to get an attorney before that coverage will be triggered. And that's actually an interesting point. It's so synonymous in my mind because that's normally how we see it. But you should understand that under most circumstances, you don't have to go and litigate in order to have your liability coverage kick in. So keep that in the back of your mind. You can have protection and you can utilize that protection one-on-one, basically between you and the person claiming injury or damages and your insurance company backing you up. After all, that is what you're paying for. That is why you have the policy. So you don't always have to get a third party involved. Not saying that sometimes it's not necessary, sometimes it is, but it's not required in the policy language for liability insurance coverage to be triggered. I don't want to go into too much more detail because I don't want to get into legal aspects. I'm not an attorney, but I wanted to give you that update. All right, we're going to take another quick break. When we come back, more of your voicemails. This is Insurance Hour you are learning from. I am your host, Karl Susman. Give us 60 seconds and we are right back at you. Stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Greg.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here and learning about insurance today. Phone lines are open, 559-656-0317. That's the number you can call. You can also text that number directly. Also, if you want to get a question off to us, go ahead. You can send an email to questions@insurancehour.com or join our community online at insurancehour.com/ask. We're happy to go through, answer your questions there to the best of our ability. Who's the hour? Who is there someone else here answering questions? I don't think so. To the best of my ability. Before the break, we were listening to your voicemails, answering your questions. We are going to continue on with that right now. This voicemail, which is affectionately labeled 44F, let's see what 44F has to say.
Hi, this is Maria calling from Sacramento. I've been driving my trusty old pickup truck for years now. It's practically a family member. I'm considering dropping the collision coverage to save some cash, but I'm not sure if that's a smart move. When is it a good idea to adjust auto insurance coverage on older vehicles? Thanks for your help.
That is an awesome question. Thanks for your call. I love that accent. That is the Southern Belle if I've ever heard it. The big question is, when does it make sense to self-insure, right? I mean, that's really the question that you're asking. When does it make sense to self-insure? And let me give you sort of a rule of thumb. First of all, there is no specific answer. I can't tell you without a crystal ball when it makes sense for you to not carry a particular type of coverage. For quick review, collision coverage is what's going to pay for damage to your vehicle when it's in an accident, right? And what she's asking is, she's saying, look, maybe my vehicle is older. It's not worth that much. If it's involved in an accident, It might not make sense for me to repair it anyway. It might be totaled. It might just not make sense for me to keep paying premium when what I would get back in the event there's a claim is so small. That's the discussion, in essence, that we're having. And there is no easy answer for that because everyone has a different risk tolerance, right? What I might decide is, okay, if I have that kind of a loss, I'll deal with it, might not be something that you're comfortable doing for yourself. So what's important is for you to sit down and ask yourself, how much money do I want to pay, if it were up to me, to have this protection? And then work backwards from there. See how far off you are from what you think it's worth to you to have that particular insurance coverage versus what that premium actually is costing. I think that's the best way for you to sort of gauge where that comes from, where it makes sense or not for you to continue that coverage. I've heard other people get more analytical about it. They'll say, well, if your premium is going to equal the value of your vehicle after 4 years of paying premium, then don't. Or after 3 years or 5 years. You can try and work on multiples of that as well. But I tend to be a little more touchy-feely about it. And I say, look, everyone's tolerance is different. What people are willing to expose themselves to for a loss are different. So I would say, personally, do a little bit of math, figure out what it's worth to you, and then compare it with the premium you're paying and find out if it makes sense to keep it or not and go from there. All right, let's get to another voicemail. This is 41M.
Hi there. This is Harper from Elk Grove. I've been hearing about cyber insurance for individuals. With all the online shopping and banking I do, is it something I should consider? What does it typically cover?
Cyber insurance. Cyber risks are huge right now, and they're not going away anytime soon. I can tell you that. And the answer is you want to have some type of cyber protection. You really do. And this is the interesting part about cyber insurance is there really is no specific boilerplate policy type. So what one insurance carrier is offering you is going to be very different than what another insurance company offers you. So don't think that when you're shopping around for cyber coverage, you're going to be able to compare dollars for dollars, apples for apples. There is no boilerplate product out there. So it's literally, if you're trying to compare something exactly like another policy, you can't. Because the policy language is different, the provisions are different. So some things to look for in cyber coverage. You could be looking at something like identity theft. You hear about that all the time. You hear about people having their identity stolen, and it is a disaster, as financially and time-wise, to try and literally you have to prove to others that you are who you say you are. Imagine having to prove to your credit card company that you are you, or to your bank that you are you, because they may have alternate information claiming from someone that's claiming to be you. They may have been doing this for a period of months or even years. It's a lot of money and a lot of aggravation, and certain types of identity theft coverage, which fall under that general umbrella of cyber coverage, can be there to help you with that cost. It's not going to make it any easier. Well, it's supposed to. I don't think it's going to make it any easier, but you're going to have somebody at least hopefully spearheading the charge for you, so you don't have to take, and figure out all the steps to go through. But it's a complicated and expensive issue when you have someone steal your identity. Other types of cyber exposure you might have could be literally someone that you get some spam. You open it up, you don't realize it's spam. It says it's from your bank. You click on a few links. Before you know it, someone has gathered information on your computer and one of your bank accounts just got emptied. Yes, it's that simple. And yes, that does happen. I know of it happening. I've heard of it happening. I've seen this happen with people that I know. So quick, little public service announcement. And you've heard this forever, but I'll say it again. Be careful when you open emails. You don't know who it's from, really. It might say it's from Aunt Beth, but it doesn't mean it's from Aunt Beth. It doesn't take more than 30 seconds for someone to change their email address and change it to a different name. Literally, you could send an email and make it look like it's coming from anybody. Literally, anybody. You just change the name. So we need to be a little more educated on what types of cyber risks are out there and what some bad actors are really doing. Cyber insurance is there in the event, in essence, you still get stuck. Right? You got stuck in the quicksand, you fell for something, or maybe by no actions of your own, your information was compromised at another level. Think about it this way. I'm trying to think of who it was. It was one of the theater ticketing companies. I can't remember which one it was that had a data breach. And all people's information that they had on file was stolen. Well, you didn't do anything wrong. You were just purchasing tickets from this place. But now your data has been leaked, and now it's literally being sold on the open net. People will buy and sell identities. They'll buy and sell credit card information. They'll buy and sell banking information, names, birthdays, socials, all sorts of stuff. There's a market, a black market for this stuff online. It's kind of scary, but it is there. So cyber insurance is there to help with this and a lot of other different things. Again, every policy is going to be different. Look for the specific types of protection you're looking for. Look at how much they're going to pay. Look at what the triggers are. Again, talk to someone that really knows this stuff, because in the event that you do have a loss, if you've gone ahead and purchased the policy, you want to know for sure the coverage that you have is going to give you the protection you're looking for. Nothing more frustrating than taking your time, buying something, paying premium, and then having a loss and realizing you didn't get what you thought you were. Time for another quick break. When we're back, more voicemails from you. Thanks for learning with me on Insurance Hour. I will be back in 60 seconds.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at sussmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4-CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello, hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here and learning about your favorite topic and mine, insurance. I'm going to make it as entertaining for you as I can. Informing, educating, and entertaining. Insurance matters. That is what I am trying to do. Hopefully, if you're here listening or watching, I am succeeding. Phone lines are open, 559-656-0317. Call or text that number. Send your questions in to questions@insurancehour.com, or if you please, you can go ahead and jump on insurancehour.com/ask. You can post your question there, share it with other people that might have the same question as you, and I will do the best I can to answer your question. On that note, I want to point something out. I do the best that I can. I've been doing this for a lot of years, and I do the best I can to give you the best answers that I can. But I don't always get it right. Nobody can. And insurance policies are interesting animals because they're all a little bit different. And you know what else? Claims are all a little bit different as well. So if you hear something that does not sound correct to you and you feel like, you know what? Karl said that, but I'm not sure I agree with that, or I had a different experience, then by all means reach out and let me know, because not only will I double check and try and find out if the information I gave was correct or if you were given the wrong information, but I will take the next step and make sure that everyone else that is tuned in will get an update as well. My goal is to get the right information to you as often as possible. And again, being human, I can't always get it right. And because we're not talking about commodities, we're talking about insurance products and claims that may follow, your mileage may vary. It's always going to be a little bit different. So no ego here. I want to get you the best information I can. So if you hear something, say something and let me know so I can go and do a little additional research and help educate everyone that much better. On that note, how does it sound if we go with 53M? Let's hear what he's got to say.
Good afternoon. This is Alexander from Hayward. I'm an independent contractor working from home. Do I need any special liability insurance, or does my personal insurance cover me if a client sues for work-related issues?
Thanks for the call. It's a great question. You're saying you're an independent contractor, and I don't know what you're doing. In general, if you are doing work of some kind and you're an independent contractor, I'm going to assume that you're your own boss, right? So you're not working for a business, you're doing something on your own. And if that's the case, then the chances are you are going to need some form of liability insurance. Don't look for your homeowner's insurance policy to cover anything business related. As a matter of fact, homeowners policies are designed to specifically exclude business exposures. Unless you make a change to it, unless you endorse those policies, endorse is just a fancy word for saying change. Unless you change those policies and the company offers you the ability to cover some type of business exposure, then you should assume your mantra should be, if it's business, it's not covered under my homeowner's policy. Guess what? Homeowners policies are personal policies. They're meant for the average person, the average individual. They're not meant for someone that necessarily is doing some type of business from home. We talked about that a little earlier today. There are home-based business policies. If you missed that part of the show, go ahead and just jump back and find it. It's on today's show. You can find it at insurancehour.com or go on YouTube, search for Insurance Hour, or check on Spotify, Apple Podcasts, whatever it is. But find today's show. We talked already about home-based businesses. So the long answer has become, yes, you should be getting insurance, and no, your homeowner's insurance policy more likely than not is not going to provide any level of coverage for you of any type of business exposure. All right, let's see what we've got next. This is 43F like Frank. Let's see what we got.
Hello, this is Emma from Oxnard. I've been thinking about getting an umbrella insurance policy for extra liability coverage. Can you explain how it works and if it's worth it for someone like me with a home and 2 cars?
Great question. First, I commend you for knowing that an umbrella policy is liability insurance, because a lot of people, rightly so, they think that an umbrella policy is just extra insurance, period. And this is a problem, right? Because that sort of makes some sense. Umbrella, it's on top of you, it's over you. It sounds like it should give you basically coverage for everything. But umbrella insurance policies are liability coverage. They're not going to pay for your personal property. They're not going to give you additional coverage for your home if it's involved in a fire and you don't have enough coverage. You can't go to your umbrella policy to pay additional. It's it's liability insurance. Now, she asked if it makes sense for her to have additional liability insurance in the form of an umbrella, and she specifically said that she has a home and 2 cars. Now, what is going to help me determine whether an umbrella policy is recommended or not is not necessarily, do you have 1 house or 2 cars or 10 cars or 4 houses? It's how much protection do you want to have? How much of a buffer do you want to put between yourself and someone else that's trying to get money from you for some form of negligence that you might have caused them, all right? It could be a bad car accident. It could be any other type of personal liability that may occur, a slip and fall at your house. Someone could slip and fall over your suitcase at the airport, right? Most liability policies are going to be worldwide coverage for you. They're going to be personal liability versus premises liability, right? They're going to protect you where you go, sort of like this little bubble of protection around you, not just for something that happens at your house. So it's difficult for me to say, well, when you tick all these boxes, get an umbrella. You want some rules of thumb? I can tell you that most people, if they own a home, should have an umbrella policy. Now, you can argue that point. You can say, well, it depends on the size of the home. It depends on, do they have, a mortgage on the home? How much is the value of the home? All sorts of things are arguable, of course. In general, if someone is at the level financially where they've put money down on a house, they own a piece of property, then probably makes some sense to think about an umbrella policy. In this country, we have a lot of, what's the politically correct way of saying that people like to sue? They do. People like to sue. And I get it. I've been doing this long enough. I understand where that comes from. And it sort of feeds on itself as well. So losses that may have been smaller 50 years ago are going to be larger, much, much larger, even inflation considering, than they used to be. This is a trend that's going on, and this is one of the reasons that umbrella policies are actually getting significantly more expensive than they used to be. Used to be you could get an umbrella policy for $1 million and it might have cost you $300-400. Now an umbrella policy is going to cost you excess of $1,000-1,500. And that's primarily because the carriers are seeing a lot more exposure in those where they're paying policy limits. It used to be almost unheard of for an umbrella policy to pay its limit, to pay out that $1 million or $2 million or whatever the policy limit might be. But this is being seen more and more frequently. And of course, when you're paying out those dollars, that's going to impact what the premiums are going to be going forward. Going forward, guess what we have? That's right. We have one more break. So let's take a quick 60-second break. When we're back, we will go through more of your questions. I'll give you more of my answers. Thank you again for listening to Insurance Hour. I'm Karl Susman. Be right back.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Greg.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here and learning about insurance with me today. Phone lines are open, 559-656-0317. Call or text that number. If we don't pick up, whoever the we happens to be, go ahead and leave a voicemail because we will get your message like we're doing today. We will play it. We will answer your question. If you do not want to have your voice on, then go ahead, tell us, and we will not play the voicemail. I will just read the question and give the answer. If you really just want to get an answer for yourself, let me know, and I'll do that as well. I'm flexible. Also, you can send your questions in to questions@insurancehour.com, or of course, jump on insurancehour.com/ask, and you can go ahead, post your question there. We will get an answer for you. Are you ready for more questions? I know you are. All right, this is going to be, let's see, looks like 4F. Let's see what 4F has in store. Oop.